Should you worry about the forthcoming recession? Well, if you read the media, if you listen to the negative Nellies, of course you should. It's just around the corner. Now, I was a bit reluctant to put this show together today because you're probably sick of hearing about the recession, but I thought it's important to give you both sides of the story. So today, together with Pete Wargent, we're going to tell you about some of the negatives affecting our economy and all the positives that the media tends to forget. And we're going to give you a balanced assessment of what's likely to be ahead. So this show is going to be very valuable for you as a property investor, as somebody who may want to buy a home in the future, so you know where the economy is heading, where the property market's heading, and particularly if you're in business as well. At the end of the show, I'm going to give you my mindset message, and I'm going to explain to you that you've won the lottery. You'll find out what I mean. So welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the fifth time he's won a similar award in the last 7 years.
Are we in for a recession? Currently, talk of a recession remains the rage and more people seem to be worried about this occurring. Now, a recession is formally defined as 2 consecutive quarters of negative GDP growth, and Australia hasn't had a recession since 1990-91. But recently, the negative Nellies are out there. They're trying to scare us that a recession is imminent in Australia. Now, I don't think that's the case, but I'm going to have a chat with leading economic commentator Pete Wargent about this. Pete's a regular guest on this podcast, and you by now would also know that regularly writes on Property Update, and he's got his great daily blog. Hi, Pete.
Hi, Michael. Good to be here.
Now, I know you're an economic commentator in the media a lot, so I bet you'll get asked this as well. So let's have a talk about what the positives and negatives are. Let's understand what's really going on in the economy, because I think this R word is scaring people. In my mind, to some degree, we've had a little bit of a recession anyway, if you not in the technical term, but wages growth hasn't been very strong, inflation's been low, and some states have had negative GDP over the last decade as well. What's your take on how Australia's economy is going?
Yeah, well, I suppose one of the key things to mention is that GDP, as it's reported, is all historic information. So it's really telling us what's gone before, especially because the stats are reported so late anyway. So we've just got the most recent figures that have been reported actually relate back to April, May, June. So, and as we all know, we went through a credit squeeze and a banking royal commission. And perhaps it's not mentioned all that often, but credit is the lifeblood of the economy. And if you limit people's ability to borrow, and if you see housing prices sliding and the wealth effect, all of that is really going to slow the economy. And that's exactly what happened. So growth over the year to June 2019, pretty slow. Will we get a recession? Well, nobody knows for sure. But if you look on the balance of probabilities and what markets are saying, pretty unlikely.
Well, economists have actually got a pretty poor track record of predicting recessions, haven't they? Because they keep predicting them all the time, or certain negative people do. And there are more headlines, I think, related to those negatives. But let's just look back, and you're old enough to remember some of these as well. Recessions, in my mind, have occurred when there's a shock to the system. And in the past, it's usually been due to high interest rates putting a brake on the system. They tend to occur after periods of excess, such as a property market boom or a stock market boom. And that happened in the early 1990s in Australia. The 1990 to 91 recession occurred after a huge period of excess, a huge amount of debt taken on, very large amount of spending and inflation. And the Reserve Bank and the government stopped it by putting the brakes on the system. Prior to that, I remember there was world stock market crashes and also an oil crisis, major events that caused the recessions we had before. There's nothing like that happening at the moment, Pete.
No, well, don't forget, I am British, so of course I've been through my fair share of recessions over the years. We seem to have them more often in Britain, much more of a boom-bust type of economy. You're right, though, Australia is quite fortunate in many ways. Got a number of ways in which the economy tends to bounce back from periods of weakness. So the floating currency is obviously a strong point for Australia. You generally find when the global economy slows down, our dollar falls, and that really helps to rebalance the economy quickly. But I think a really big thing that Australia has compared to a lot of European countries, for example, is just low debt from on the government side of things. The budget's now back in balance or close to a surplus. So if things really turn slow and things look to be heading for a recession, the government can easily borrow a AAA rated country, and we could borrow at very, very low rates. So there's lots that can be done, even if the economy does go into a slowdown or even a negative period. You generally find that Australia bounces back pretty quickly.
Well, it's got that shock absorber, as you said, of the interest of the Australian dollar rate, which wasn't around many years ago in the 80s and 90s when we had that previous recession. So I want to talk about the good things that are happening because I think they get overlooked, and there are a lot of good things still happening. But before we do, let's quickly go through the things that the negative Nellies are talking about that are concerning them. One, we've already discussed that the GDP it was reported as low, but as you said, the last figure was the June quarter, comes out quarterly, and it was 0.5%. So I believe the economy is likely to pick up. And if you even just doesn't and you annualize that last quarterly result, still gives you a pretty reasonable GDP of around 2% growth. In my mind, Pete, we're in second gear, not in reverse.
I guess the composition of the growth has been exports have driven quite a lot of it. The real economy has been very slow, and the reasons we already mentioned is the Royal Commission really put a dampener on credit. We'd already had intervention from APRA on borrowing in the economy. So, all of that stuff really slowed things down, but I guess it's the future we're interested in. I suppose the big drag on the economy, and it's related to those previous factors, is just construction. Construction's been very, very strong in Sydney and Melbourne especially, but I think that's going to slow down. And if you look at it, about 10% of employed Aussies are working directly in construction. So there's a big hole in the economy that's got to be filled. So if there is a risk, it probably relates to the sharp drop in particularly dwelling construction that we'll see over the next couple of years. But as I'm sure you'll mention, there's plenty of other factors that can come in and pick up in its place.
I think you made a couple of good points there. First of all, our GDP was propped up by public spending, government spending, and net exports. But the unemployment is a risk. There's no doubt about it. Wages growth is slow. We're creating jobs, Pete, but people are coming back into the workforce. The participation rate is higher, and more people are getting part-time or casual jobs. So underemployment is on the rise. And you're 100% right, with the dwelling approvals for high-rise constructions down, that huge sector that stopped us having a recession a while ago, when all the people who were working in the mining industry had to find jobs. I think the low interest rate environment encouraged them to go into the high-rise construction sector, Pete.
Yeah, there was a confluence of factors. As you know, there was a big surge in Chinese investors from mainland China everyone's an expert in hindsight, but I don't remember people talking about that too much 10 years ago. And yet, with low interest rates, we had rising housing prices, and then all of these foreign investors came out of nowhere. So, all of that just drove a construction boom. But as we always see in these cycles, stuff gets built, second-rate locations on main roads. Stuff is thrown up very quickly, and we're seeing some of the impacts of that, and the fallout now is a lot of building defects and other things. I guess it's all part of the cycle.
Well, what that's going to do is mean that there's going to be concern by investors and home buyers buying in these new high-rise towers. There's going to be a concern for those who already own there as well. So that's going to create a stigma on the high-rise apartment building. It's going to take quite some time for that to go away, for builders to get the funding, developers to get the funding to do new projects, which are going to cost a lot more in the long term. So I can see a hole in employment, a gap where the construction workers are not going to have as many jobs. And we're noticing that from at Metropole with our construction company. Even we're doing it at a much smaller scale and very medium density developments, and trades are around. They're there. But there is a sort of recession. We keep bringing up the R word. I don't like doing it, but in the retail sector, large parts of the retail sector are suffering from the trend of online purchasing and, I guess, as you started to say, lack of consumer spending.
I think, yes, the bricks and mortar retailers, I think this is going to be an ongoing challenge for them because the big companies, the Amazons of the world, are really making inroads. And in fact, Amazon Australia is now up and running. And retail has really struggled for a couple of years now. Interesting that is putting downward pressure, though, on prices. So Amazon famously doesn't really look to generate much in the way of profit. It's always just growing market share. And this is one of the factors that's going to see interest rates down towards somewhere near zero, you would think, because there's just no inflation in Australia. Been under target now. The target's in Australia 2 to 3%, and we haven't even been near that for a best part of half a decade. And I think the Reserve Bank has now just, as you mentioned, they've recognised record high participation. So that they're basically taking the view the economy can run quicker, and if it can, and interest rates can fall, then they should fall. There's a bit of support coming, I guess, from record low rates, and that's obviously has a flow-on impact to the property market, which will pick up along with the wealth effect.
And the last area that's having a negative impact that people are concerned about that I'd like to discuss with you, Pete, is the turmoil in the world economy. The US trade wars, tension in the Middle East. You tell me more about it than I know about Brexit. All these uncertainties are likely to constrain business investment and growth.
Well, I think they will. I suppose the counterpoint to that is that there are always uncertainties. I think if you plotted a chart of stock market activity every year, there would always be something that, it was the European debt crisis, and then it was something else, and then, then it was Ebola. So there's always something to worry about. I suppose on the plus side, the global cycle is now back towards easing, and it's not just the US, interest rates are falling in the US, but also easing in Australia, but China, Russia, Thailand, Philippines, you name it. All around the world, interest rates are falling. And eventually that does lift global growth again. So for sure, there's always uncertainties, but that's not going to go away. There'll always be something to worry about.
There always will be. And I remember a number of years ago, I wrote a blog. I went back year on year on year. Every year there was always crises, whether it was petrol problems, Asian crises, a war somewhere in the world, stock market crashes. And despite all that, we've gotten on. The world has improved, living standards have improved, economies have improved in general. But again, it depends where you're talking about. Our audience in particular for this podcast, Pete, of course, is in Australia and Southeast Asia, where the world is doing pretty nicely. So let's not forget all the good things that are happening at the moment. As you've said a couple of times, interest rates have been cut, tax cuts have come in as well. So far, we haven't actually seen those incentives have a big effect yet on spending and consumer sentiment.
No, it takes time, and I think it's difficult to get a read on this, but it seems that some people have opted to pay down debt. Some people have sucked some money away for a rainy day, so it hasn't really stimulated the economy yet. But these things take a bit of time to wash through. Yeah, it's been a slow period for the economy, but as I said, if you look at the balance of what markets are expecting, there's no recession on the horizon. Just been a slow period for the economy.
As well as that, there's opportunities for further rate cuts, even though they're limited, and other monetary policies. Similarly, the government could spend more. It's spending a bit of money on infrastructure, but it's going to have a budget surplus, and the debt, as you said, to GDP is very, very low. So you'd already hinted that the government can boost the economy, grease the wheels of industry with incentives.
It's interesting. The government's been almost hell bent on getting the budget back to surplus. It's obviously it's a big political tool in Australia between the two main parties. There hasn't been much of the way of desire to spend by the government at the moment. But yeah, if the economy really slows, then there's plenty of room for fiscal stimulus as well.
Yeah, look, I'm a little bit cynical like you. I bet they could do it now, but I think they want to come out with the surplus, say, look how good we are, and then they're going to spend it and say, look how good we are. We've actually gotten this position, and now we can save you. So you're right there. Of course, another strong positive for Australia's economy is population growth, and that's going to continue to support the economy. Some people are going to argue that population growth is taking away our jobs, but I'd argue that it's actually bringing people in who are in household formation age, who are going to have jobs, going to pay tax, and when they form homes, they're going to buy televisions and fridges and carpets and curtains, rent properties, buy properties. Population growth, in my mind, is good for our economy.
There's a pro and a con to everything. One of the things that we've actually seen in Britain is that with the potential for Brexit and changes to freedom of movement, a lot of Eastern European workers have gone home, and we've actually seen wages suddenly rising quite sharply in Britain. So I don't doubt that if population growth in Australia is running at 400,000, of course that's going to put some downward pressure on wages. But as you said, it also fuels new construction, and not just of housing, but also commercial real estate. It adds to demand in the economy. But I think the important thing for Australia is that what it's doing, it's slowing the aging of the population, it's reducing the dependency ratio, and it's increasing the tax take. So it's doing a lot for Australia's demographics over the medium term. In the short term, of course, we would like wages to be growing a bit faster than they are, though.
Sure. So somebody has to replace all the retiring baby boomers who are going to be using more of the healthcare system, who are going to, many of them go on the pension because their superannuation when they started wasn't enough to see them through. So we do need more workers. Otherwise, it's going to be those who are left in the workforce who are going to have to pay more tax. We already talked about infrastructure spending is booming, and that's another positive for our economy. But infrastructure doesn't take as much labour as high-rise construction, but it does leave a legacy for the future, and it does tend to use local resources, Pete.
Yeah, infrastructure is obviously, it's not just something that benefits the economy in year one. It's for the future, and we do need to invest in infrastructure in Australia because with population growth still running at about 400,000 per annum, that's a lot of congestion that needs to be busted. And if you want to increase productivity in the economy, strong infrastructure is obviously a key part of that.
And just continuing on with the positives for our market, business investment is improving. Businesses are starting to see some blue skies ahead and are starting to invest in inventory and employ more people. That's good for us too.
Yeah, it's kind of been masked a little bit by the mining downturn since 2012. So business investment has generally been falling. But what's probably less well recognised is that in the services economy, investment has been picking up now for quite some time. And mining investment is actually finally, after all these, 6 or 7 years, is finally going to stop falling. So capital investment has been in a downtrend for, 6 or 7 years now, but finally things are actually on set to rise. So it's been a tough few years for the economy, but there's some blue skies ahead, as you said.
Taking all that into account, if we fall into a technical recession, if the numbers and figures come out and show, yes, we've dropped, the GDP's gone down by 0.1, 0.2%, I can't see a recession this time round having the social impact, the huge unemployment issues, the great drag that previous recessions have had?
No, I mean, it's interesting actually because unemployment's at 5.3%. You could easily go into a technical recession and see, 94 to 95% of people still employed in the labour force. But one thing that the recessions can do is have a simple knock on confidence. Because one of the key things for Australia in the global financial crisis, we did have a negative quarter of growth. But then China stimulated its economy and we bounced back the next quarter. And the consumer confidence figures, they just soared because we didn't have that technical recession. I think they jumped about 8% in the following quarter. I think sometimes it's just a confidence issue. If the media is just banging on about recession, that doesn't really encourage people to hire, to spend. So sometimes it's more just the impact on consumption and confidence than anything from a global perspective.
I agree with you. I remember during the 1991 recession in Australia, and there wasn't the news on the internet, it was in the daily papers, on the radio, on TV, continuously, daily. There was scaremongering. And I thought then, when I didn't understand as much about economics, guys, you're creating a self-fulfilling prophecy just by continuously bombarding us with this. It's making me scared and I'm not going to spend. So it is, in some ways, a self-fulfilling prophecy. Maybe the last thing we should talk about, because a lot of people listening to you and me at the moment are also thinking, well, if we do have a bit of a recession, what's that going to do to the value of my home? And it really depends, I think, where you are, because when we look back at the recession of 1991 in Australia, it lasted 12 months and it came after a period of very high interest rates, and then it was very much state driven. So Victoria was the worst hit where I lived because unemployment went up to about 13%. There were huge excesses in Victoria prior to that. And so property values dropped about 2% in that year in Victoria, but around the rest of Australia, property values rose slightly. So recessions are not always as bad for the property market as some of the property pessimists would suggest, Pete.
No, and in fact, I can say this to you, Michael. This is the first time in a long time I'm not even remotely worried about any of the properties in my portfolio. I think before the election, there was an awful lot of uncertainty about, well, will we see a change of government, change of tax policies? But almost overnight, the market turned. Yeah, well, we've already mentioned the media penchant for negative news, but gee whiz, aren't there some people out there hoping for a recession? It's just daily subscriber content for some people these days. But I don't think we'll see a recession anytime soon. But from a housing market point of view, I think, as we already mentioned, high-rise apartments and new apartments, there's plenty of fallout to come there. But in the established housing market in the capital cities, I think the base case for the next 5 or 6 years with a Liberal coalition government, my base case is for strong growth.
I agree with that. Well, I'm pleased we've had this chat because it brought both sides of the party to the table. We've mentioned some of the negatives that are impacting our economy. We've mentioned some of the good things that people tend to forget. And I think we're agreeing that Australia's economy is likely to remain weak over the next few years. Wages growth is going to be slow. Consumer spending is likely to remain weak. Unemployment is likely to rise a bit over the next couple of years because of challenges in the construction and the retail sector. And yeah, our economy is going through a rough patch, but a recession seems unlikely in the near future. And that's good news, isn't it, Pete?
It definitely is, and long may it continue.
Thanks a lot. And we're going to keep having these regular chats on the Michael Yardney podcast. But if people want to get more information from you between now and then, how do they get in contact with you?
Oh, easiest place, Pete Wargent Blogspot. That's my daily blog. And if you want to see some videos, no shortage of content, check out my website, gonextlevelwealth.com.au. Loads of content and videos for you there as well.
Thank you very much, Pete. Catch up with you real soon.
Pleasure. Cheers, Michael.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
My mindset message to you today is that you're a miracle. There are roughly 7.7 billion people in the world today. Imagine the world's biggest lottery in which every one of us is required to draw a ticket with the circumstances that we're going to be required to live in for the rest of our lives. For example, are you going to be male? Are you going to be female? Which country are you going to be born in? What type of government are you going to have to suffer? What are your parents' income levels? What are their occupation? What's your IQ going to be? Remember, you're going to draw a lottery ticket that's going to tell you what your life's going to be like. Your height, your weight, your eye colour, your hair colour, your body type. It's going to tell you what your personality traits are, your temperament, your wit, your sense of humour, the level of your health. Now, if you're listening to this, I'm guessing you drew a ticket when you were born that wasn't too bad. The probability of you drawing a ticket that has the favourable circumstances you're in right now is incredibly small. In fact, I've read that the probability of you even existing comes out to 1 in something followed by 2 million zeros. I don't fully understand how they work that out, but the chance of you being alive, being who you are, I guess then means basically zero. In other words, you're a miracle. Warren Buffett often talks about how grateful we should be for all the circumstances we're born into and the generous ticket we've been offered in life. He says we shouldn't take it for granted or think that it's the product of something we did personally. We just drew a lucky ticket. He points out that his skill of allocating capital would be totally useless if he'd been born into poverty or at the time of the American Civil War. Yet most of us are too quick to complain about the traffic on the way to work, or the weather that's going to spoil the sport or the weekend, or ungrateful clients that you've got, or customers that you've got, or your boss, or people we've got to deal with. I guess many of us suffer a self-entitlement syndrome. Entitlement gets us nothing but heartache. It blinds us from the magic of gratitude. And you've heard me talk about gratitude before. And most of all, entitlement lets us off the hook, pushes us away from taking responsibility and action and towards apportioning blame, anger and self-pity. On the other hand, gratitude, that's just as valid a choice, except that gratitude makes us open to possibilities. It brings us closer to others. It makes us happier. So I want to finish this mindset message with a simple life hack. You're not grateful because you're happy. You're going to be happy because you're grateful. Well, thanks for listening to this week's show. Now you know you've won the lottery and you understand why I'm not worried about Australia falling into a recession. And even if it does slip into a recession, it's not going to be as bad as some of those recessions that other countries have had overseas. Of course, there are so many unknowns outside Australia that major issues overseas could affect us. That's why it's important to be prepared. And one of the things we always talk about with our clients at Metropole is having financial buffers in place to see you through the ups and downs. By the way, if you'd like to understand a bit more about how we can help you develop a level of financial security, wealth, leave a legacy, in fact, we help our clients grow, protect and pass on their wealth, have a look at metropole.com.au and find out how we can help beginning investors get into the market, experienced investors grow their property portfolio, and established investors outperform the averages by becoming property renovators and property developers. And by the way, we've got no properties for sale, so our aim is to give you independent, unbiased property and wealth advice. Now, before we finish off, I'd like to read out a review, and you know each week that when I do read out the reviews, if it's yours and you email me, michael@metropole.com.au, I'm going to give you one of my books. And this time it goes to Scatman Drew, who left a 5-star review on Apple Podcasts saying, "Outstanding podcast. Thanks so much for the awesome podcast. Your ability to make the complicated simple is invaluable. Love your work." Well, thank you for those kind words. And if you've got some benefit from today's podcast, or if you know somebody who's worried about what's happening in the world in a recession, pass the message on. My aim is to educate as many Australians as possible to become financially fluent, to become more independent financially, and the best way to do that is help other people become financially independent as well. It's actually, if we lift each other up, we're going to live in a much better country. And we already live in a fantastic country. You already know you won the lottery. So just share this show with somebody. At the bottom of every podcast app, there's a share button. In the meantime, I look forward to catching up with you, because I will bring you this show twice a week. So in the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?